federal government shutdown isn't just political theater in Washington. It's a financial time bomb detonating in Florida's housing market right now. Over 50,000 home sales hang in the balance. Billions of dollars frozen mid-transaction. And the clock is ticking faster than anyone realizes. Since October 1st, the government shutdown has paralyzed the critical programs keeping Florida's real estate market alive. The National Flood Insurance Program has completely expired, leaving over 150,000 policies per month without renewal. FHA and USDA loans are frozen solid. Environmental permits for new construction cite untouched, with 90% of EPA staff furloughed. In a state where real estate represents 24.1% of the entire economy, the engine driving Florida's prosperity is grinding to a catastrophic halt during hurricane season. In this breakdown, we're revealing exactly how the shutdown is destroying Florida's housing market, the billions at stake, and what this means for buyers, sellers, and investors across the state. Hit subscribe to Housing Intel and ring the bell so you never miss data-driven real estate intelligence like this. The flood insurance crisis. Florida holds 1.8 million NFIP policies, 1/3 of every flood insurance policy in America concentrated in a single state. Every month, 150,000 of those policies reach their expiration date and need renewal. But on September 30th, the National Flood Insurance Program's authorization expired alongside the government shutdown. And right now, FEMA cannot issue new flood insurance policies or renew existing ones. If someone is buying a home in a special flood hazard area with a federally backed mortgage, flood insurance is mandatory. No flood insurance certificate, no closing. Period. The National Association of Realtors confirmed that existing policies have a 30-day grace period after expiration, which is running out for policies that expired in late September. Florida processes roughly 15,000 home sales per week that require flood insurance. 2 weeks into the shutdown, that's 30,000 transactions sitting in limbo. Analysts project over 50,000 closings at immediate risk by the one-month mark, representing $22.27 billion in real estate value frozen in place. If the shutdown stretches to 30 days, the number balloons to 108,570 threatened transactions worth $47 billion. Reuters reported that 8 states, including Florida, could see more than 50% of their total home sales paralyzed if flood insurance remains unavailable. And Florida sits at the absolute epicenter. Construction. Grinding to a halt, Florida needs over 100,000 new housing units to meet current demand, but the shutdown has thrown a massive wrench into the machinery. The Environmental Protection Agency operates with only 11% of its workforce during the shutdown. 89% of EPA employees, approximately 13,432 workers, are furloughed. That skeleton crew cannot process Section 404 Clean Water Act permits required for nearly all new residential construction near wetlands, which includes most of Florida's developable land. Without these permits, construction cannot legally begin. The EPA confirmed it has ceased issuing new permits entirely, with environmental inspections stopped, grant approvals frozen, and site certifications delayed indefinitely. For developers operating on tight construction timelines and carrying massive land acquisition loans, every week of delay costs tens of thousands of dollars in interest payments, contractor fees, and lost sales momentum. Multiple projects across Central and South Florida have already announced construction delays. The ripple effects will take months to resolve even after the shutdown ends, because the EPA will face a massive backlog of applications when it returns to full operation. Projects delayed now won't break ground, until spring 2026 at the earliest, pushing Florida's housing shortage deeper into crisis territory. Florida is the seventh largest recipient of FHA mortgage funding in America. In June 2025 alone, Florida homebuyers secured $2.4 billion in FHA loans. Add another $327 million in USDA rural development loans, and federal lending represents a critical lifeline for first-time buyers and middle-income families. The shutdown has frozen both programs completely. The Department of Housing and Urban Development is operating with drastically reduced staff. New FHA loan applications aren't being processed, underwriting approvals are delayed indefinitely, and even loans already in the pipeline face uncertain closing dates because final HUD certifications can't be issued without full agency operation. The impact goes beyond individual buyers. Real estate agents can't write contracts with confidence when they don't know if their clients can actually secure financing. Title companies are adding shutdown contingency clauses to closing documents. Sellers are pulling listings off the market rather than tie up their property in contracts that might never close. The entire market psychology has shifted from momentum to paralysis in just 2 weeks, with federal lending representing the foundation that's crumbling beneath Florida's housing market. If you're finding this breakdown crucial, tap that subscribe button to Housing Intel. Drop a comment below and tell us, are you a Florida buyer, seller, or investor watching this crisis unfold? We read every single comment. The economic domino effect. Every single home sale generates approximately $125,000 in economic activity across the local community, including realtor commissions, title insurance fees, moving services, home inspections, appraisals, furniture purchases, and renovation work. Each sale also supports an average of 2 full-time jobs in related industries. When 50,000 closings get delayed or canceled, that's $6.25 billion in economic activity evaporating from Florida's economy, and 100,000 jobs threatened. Realtor.com data shows that real estate contributes 18% to the total U.S. GDP, but in Florida, that percentage jumps to 24.1% because the state's economy leans so heavily on construction, property investment, and housing-related services. What happens in Florida doesn't stay in Florida. The state is the third largest housing market in America by total sales volume. Title companies report that closings scheduled for mid-October are already converting to cancellations. Buyers are walking away because they can't secure flood insurance or federal financing. Sellers are dropping prices to attract cash buyers who don't need government-backed loans. Builders are pausing new projects because they can't get environmental permits. Investors are pulling capital from Florida markets because uncertainty destroys investment thesis. This is the cascading failure scenario playing out in real time. Congressional negotiations to end the shutdown remain deadlocked. Even if an agreement emerges tomorrow, the National Flood Insurance Program needs separate reauthorization legislation. That means 2 different political battles must resolve before FEMA can resume issuing flood insurance policies, with no clear timeline for either. Meanwhile, Florida homeowners with policies expiring in October face impossible choices. Let their coverage lapse and risk being uninsured during hurricane season, or pay 3 times more for private flood insurance if they can even find a carrier. Permit backlogs will take 12 to 16 weeks to clear under optimistic scenarios, and federal lending programs will restart eventually. But the psychological damage to buyer confidence might persist much longer. The market was already showing cracks before October 1st. Inventory was climbing, prices were softening in key metros, and builders were cutting prices aggressively. The shutdown didn't create Florida's housing challenges, but it's accelerating every negative trend and eliminating the support systems that kept the market functioning through previous downturns. 50,000 sales at risk is just the beginning. If this shutdown extends into November, the number doubles. If it reaches December, Florida's housing market faces a crisis that will define the state's economy for the next decade. The government shutdown isn't coming for Florida's real estate market. It's already here, and the damage is compounding with every passing day. Florida has become ground zero for a housing crisis manufactured entirely by political dysfunction. The shutdown isn't an abstract problem for economists to debate. It's destroying real wealth for real families right now. Every day, Congress fails to act. More sales collapse, more families lose insurance coverage during active hurricane season, and Florida's economic engine loses momentum that will take years to recover. If this analysis opened your eyes to what's really happening in Florida, smash that like button right now. Subscribe to Housing Intel for weekly data-driven market intelligence that cuts through the noise and delivers the insights you need to protect your investments. And drop a comment below. Which aspect of this crisis shocked you most? The flood insurance meltdown? The construction freeze? Or the federal lending collapse? We want to hear from you. We'll see you in the next breakdown, because in markets like these, knowing what not to do can be the most valuable investment decision of all.